Economic size is often evaluated using gross domestic product, GDP, but GDP can be calculated in different ways. The two primary methods, nominal GDP and GDP based on purchasing power parity, PPP, each offer distinct insights into a country's economic capacity. Nominal GDP. This measure is calculated at current market exchange rates and reflects the total value of goods and services produced within a country, expressed in US dollars. Nominal GDP comparisons are straightforward but can be misleading, as they rely on exchange rates, which fluctuate based on a multitude of factors, such as trade balances and global economic conditions. For example, during periods of a strong US dollar, nominal GDP figures for other countries may appear smaller when expressed in dollar terms, even if their actual production capacity remains unchanged. Purchasing power parity, PPP, adjusts GDP by accounting for cost of living differences and price levels between countries. PPP measures the value of goods and services in terms of what they can actually purchase within a country's borders. This metric gives a more accurate comparison of domestic economic power and consumption potential, making it more reliable for assessing economic size. PPP-based GDP indicates that while nominal exchange rates vary, the actual goods and services produced by an economy may tell a different story about its size and strength. Given the price level adjustments and cost of living equalization inherent in PPP, it often presents a more accurate picture of what a country's economy can produce and consume, irrespective of exchange rate fluctuations. For China, this measure highlights the strength of its internal market and production capacity, revealing a picture that nominal GDP alone does not fully capture. According to recent data, China's GDP in PPP terms is significantly larger than that of the United States. Since 2014, China's economy has led in PPP-adjusted GDP, illustrating the size and strength of its domestic market. For example, China's GDP measured in PPP in 2023 was approximately $30 trillion, and United States GDP measured in PPP in the same year was around $25 trillion. These figures indicate that China's economy is roughly 20% larger than that of the United States when adjusted for PPP. This disparity demonstrates that in terms of real purchasing power, the Chinese economy is already the world's largest, reflecting the breadth and depth of its domestic market. PPP accounts for cost of living variations, making it more reflective of what Chinese consumers and businesses can afford and how much they can produce. While nominal GDP remains a critical metric, particularly for trade, investment, and currency valuation, the PPP-adjusted GDP data illustrate the formidable internal market strength of China's economy. This reality means that, by some measures, China has already surpassed the United States in economic power. Projecting China's rise in nominal GDP for China's economy to overtake the US in nominal GDP, several important factors come into play, the most critical of which are the growth rate differential between the two economies and exchange rate dynamics. 1. Economic growth rate differential. China has maintained a faster GDP growth rate than the US for several decades. Since initiating market reforms in the late 1970s under Deng Xiaoping, China has become an economic powerhouse, with GDP growth rates often exceeding 10% per year in the early 2000s. Although growth has moderated, it still outpaces the United States. China's expected GDP growth, projected to average 5% annually over the coming years. US GDP growth, expected to be relatively steady at 2.5% annually. Assuming that China sustains a growth rate of approximately 5%, the economy will continue to close the nominal GDP gap with the United States. This growth differential reflects China's vast infrastructure investments, its expanding middle class, and ongoing industrial and technological advancements. If China continues its current trajectory, driven by innovation and consumption, the growth differential could enable it to surpass the US in nominal GDP by the mid-2030s. 2. Exchange rate dynamics. Another key factor in nominal GDP comparisons is the exchange rate between the Chinese yuan, CNY, and the US dollar, USD. Historically, the Chinese government has maintained a relatively undervalued yuan to support its export-driven growth model. This policy has been essential for boosting Chinese exports, but it also means that China's nominal GDP appears smaller than it would if the yuan were valued closer to its purchasing power parity. If the Chinese yuan appreciates against the dollar, China's nominal GDP will increase in US dollar terms, accelerating the convergence with the US economy. Conversely, if the yuan remains stable or depreciates, the crossover may take longer. Recent trends show that China has taken steps toward currency internationalization, and if these efforts gain momentum, the yuan's value could rise, thereby bringing China closer to the US in nominal GDP terms. Projected timeline for China's nominal GDP. Overtaking the US. Using the above assumptions and data, we can estimate a potential timeline for when China's nominal GDP might surpass that of the US current nominal GDP gap. As of 2023, China's nominal GDP is estimated at $17 trillion, while the US's nominal GDP is around $26 trillion, leaving a difference of approximately $9 trillion between the two economies. Annual growth rate differential. Assuming China grows at 5% per year nominally and the US maintains a rate of around 2.5%, China's economy will continue to close the nominal GDP gap with the US. This convergence would be further aided by a gradual appreciation of the yuan at about 1% per year against the dollar. Timeline projection. Based on these growth and exchange rate assumptions, China's economy could potentially reach parity with the US in nominal GDP between 2035 and 2040. If China achieves growth above 5%, or if the yuan appreciates more quickly, the transition could happen as early as 2032-2035. Conversely, if China's growth rate slows or the yuan remains stable, the crossover may be delayed until the late 2040s. Case studies and historical comparisons. Several historical cases can provide insight into the potential paths and pitfalls that China may face as it approaches the US in nominal GDP. Japan's economic growth and subsequent slowdown. In the 1980s, Japan's economy grew rapidly, and some analysts predicted that it would surpass the United States. However, the bursting of Japan's asset bubble in the early 1990s led to a prolonged period of stagnation known as the lost decade. A similar scenario could play out for China if its property market or financial system encounters significant structural challenges, potentially delaying or halting its rise in nominal GDP. Germany and the European Union. Germany has long been Europe's largest economy, exerting considerable influence within the European Union. If China were to integrate more deeply with other Asian economies through initiatives like the Belt and Road Initiative, BRI, and trade agreements, it could bolster its regional economic influence. Such integration could help stabilize China's growth and support its rise as the dominant economic power in the region, if not the world. Based on current economic growth rates, exchange rate projections, and an analysis of broader economic trends, China's economy could surpass that of the United States in nominal GDP by approximately 2035 to 2040. However, this projection comes with certain caveats, as unforeseen shifts in policy, market conditions, or geopolitical tensions could influence the timeline. In PPP terms, China has already achieved the status of the world's largest economy, reflecting its massive domestic market and consumption capacity. Yet the global influence and trade implications of nominal GDP mean that China's eventual overtaking of the US will mark a major shift in economic power. This transition will affect global trade, diplomacy, and investment flows, marking a shift that will redefine international economic dynamics. Ultimately, the trajectory suggests that China is on track to become the largest economy, though its path will likely be shaped by innovation, demographic factors, and policy adaptations. For the United States, remaining competitive will require continued investment in technology, a skilled labor force, and strategies to adapt to a changing global economy, even as China's nominal GDP approaches parity. The timeline to surpass the United States may be difficult to predict with absolute certainty, but China's role in reshaping the world economy is already in motion, establishing a new chapter in global economic history. Please share your opinions about this topic in the comments section.